Hi there, everyone. Welcome to another episode of the AskTom YouTube series. I'm Tom Whitlock. I'm a business development consultant at Clifton Asset Management. We're a team of pensions specialists and financial advisors based in Bristol. And I'm very pleased today to be joined by one of our senior advisors, Anthony Malcolm, to discuss the process of buying shares in your using your pension and exactly what might be done with the right advisor and the right trustee. So, Anthony, welcome once again. How are you? You good?
Hi, Tom. Good afternoon. Very well, thanks. Are you well?
Yeah. All good. Good to have you back on another episode of Ask Tom. So I think possibly one of the things that most people are very well aware of that you can do with a pension is you can pay money into it and you can use it to buy shares. That's probably the basic end of it. Do you want to start with that and maybe build up to some of the more technical things that people might do in certain circumstances?
Yeah, sure, Tom. No problem. I think for many people, they concentrate on putting money into a pension. And then to a certain extent, they can be forgiven for not really understanding what happens to the money that's gone into the pension once it's in there. They receive statements, they receive updates, but it's very much a big box in which sits various machinations and goodness knows what. Typically, with an insurance company pension of the type that we're all familiar with, you will see funds comprising different offerings. And actually, when you strip those away to their bare details, whether they're unit trusts or open-ended investment companies or whatever it happens to be, you are effectively using your pension to invest in shares issued by companies. And those companies are typically large multinational listed companies, i.e. companies that sit on an index, a stock exchange of some sort, the FTSE 100 being a classic example. So you are indirectly investing in one or indeed many of these companies, but at such a microscopic level as not to make an individual difference. And so the pension is invested, and it goes on behind the scenes. And if dividends are awarded, the pension schemes benefit from the dividends, capital appreciation of share price, and so on. So in terms of pensions 101. The vanilla option, if you like, is having these largely sort of nameless, faceless fund managers investing money on your behalf, and that tends to be something that most people are familiar with.
Sure. And whilst that's going to be a path that most people out there are going to walk and go through fairly well and have a great outcome using their pension to invest in shares like that. There does exist, of course, any number of people that might want to diverge from that path. And you've mentioned shares that are listed on exchanges. There exists shares that aren't listed on the FTSE or the Dow Jones or whatever it is. What can be the options for people looking to do something with that? And what are some of the steps involved in your experience?
Yes, I think, again, if the vast majority of people invest on a collective basis, i.e. lots of people clubbing together at a very low level to invest, you get slightly more sophisticated investors who like to perhaps dabble directly in share investments. And again, that is typically through a stockbroking facility, and it's typically accessing listed shares of particularly well-known companies. What's not so well understood is that pension regulations do allow for investment in unlisted shares. And of course, that's a far bigger, broader, more diversified community than your standard listed offerings. So under the right circumstances, and it is very, very closely monitored, heavily policed at the regulatory level, as you might expect, because of risk and diversification and this kind of thing. But it is possible for pensions to invest in shares that are not quoted on a particular index. And where that can be quite interesting, if you're sort of heading off the beaten track somewhat, is that, of course, every limited company that operates in the UK is established with share capital. And there are different classes of shares, different structure of shares, different priority of share rankings. But whenever you set up a limited company, you do so with an initial injection of share capital. And of course, what that means to many business owners is potentially, as well as using their pension to sort of fund large multinationals via, as I say, nameless, faceless fund managers and collective endeavours, they can, under the right circumstances, potentially use their pension to acquire shares in their own businesses, which opens up a whole sort of vista of opportunity that most people are unaware of.
Sure, and like you said, this is not going to be anything mass market. You know, the person saving £50 a week in their pension is never going to look at doing anything like this. Like you said, it's going to be people on the sophisticated end of the investor sort of spectrum, and also those that are business owners. So this is a thin end of a particularly thin wedge, so to speak. But in terms of what people should sort of expect or sort of have to do before this process can get underway, I mean, I take it with yourself as an advisor, Anthony, this is the kind of thing that you see fairly regularly. Is there any pointers that you could make to the people at home before they look into this, and what they should expect, really?
Yeah, I think that the big thing, Tom, is when you get into the more sort of nuanced elements of what pensions can do, you tend to find a disconnect between the regulations as they are written down in tablets of stone by the various bodies, and the individual practitioner comforts that different pension providers bring to the table. And this has been seen, across the board. What typically happens is the government of the day will come up with a whole raft of legislation, which take effect either immediately or from the next budget, and then those rules are then enshrined in statute, and the expectation is that they're immediately rolled out to everybody, on the ground, so to speak. But of course, the problem is that individual pension providers, practitioners, have to then accommodate those changing rules and, if you like, assimilate that offering within their client portfolio. And of course, commercially, depending on the levels of business and the volume of interest in the more marginal investment opportunities, lots of pension providers, whilst they will be patently aware of what the law allows, will not necessarily offer that as an option, because it's simply not commercial for them to do so. So I think the first bit of advice, as is always the case with anything that's on the sophisticated end, is to seek advice. If it's not a statement of the obvious, you always recommend that somebody seeks advice in the first instance. And what you would hope is that any advisor worth his or her salt will be aware of the kind of practitioners operating within the industry who have a tried and tested methodology for accessing these kind of investments. And I know for a fact that there is a large disparity between what you can apparently do based on rules and regulations and what individual practitioners will allow. So in the first instance, I would always speak to an advisor. You might expect me to say that given my job, but nonetheless, I would recommend that anyone speak to an advisor, and that you rely on their ability to navigate what is a fairly sort of complicated environment to point you in the direction of the right kind of providers.
Sure. So the right advisor, the right provider, and you're onto a good start there. I think that's a good way to end this, probably, Anthony. So I'll thank you very much for your time. Good to speak to you again, and we're sure to have you back sometime soon. For anyone who may be watching at home and think this may be of interest to them, potentially one of their clients, or you just want to find out a bit more about who we are and what we do here at Clifton, I'll make sure that contact details are listed below. But for now, thank you to those at home. Thank you, Anthony, for your time, and make sure to subscribe and tune in for the next episode of AskTom. Thank you all. Stay safe and goodbye.
Cheers, Tom. Thanks.